Welcome to Tax Matters. This video blog is dedicated to helping you to legally avoid paying sales and use tax on the purchase of an aircraft, vehicle, or vessel that will be stored, used, or registered inside the state of California.
Hi, I'm Tom Alston, and I'm here to assist you. Since my last video blog, many people have asked me the same question. What's the difference between sales tax and use tax? Many people think use tax and property tax are the same thing. That's not true. Sales tax is a transactions tax currently at a rate of between 9 and 10% in California. Sales tax and use tax are close to the same. Both are transaction taxes. The rate is the same. The difference between the two is who is responsible to report and pay the tax. Every purchase of an aircraft or vessel is subject to one or the other, never both. But to clear the major confusion once and for all, use tax is not property tax. Another term you need to understand is mobile transportation equipment. For the purpose of this video, when you see the letters MTE, substitute the term aircraft, vehicle, or vessel, and it will help you understand the area of law that we're discussing. Okay, here's the definition of sales tax. The important thing for you to know is if you take possession inside California from a retailer, he'll collect sales tax from you. If you want to legally avoid the transaction tax, you can ask the retailer to deliver the aircraft or vessel to you outside of California. There is a specific form that is authorized by the Board of Equalization, so a California retailer can deliver an aircraft or vessel outside the state, and it legally relieves the retailer from the responsibility of collecting the sales tax. Don't be afraid to ask them. Now, here's the definition of use tax. The key point in a use tax transaction is it's the buyer who's responsible to report and pay the tax. There are two important sub-points regarding use tax. If the retailer is an out-of-state retailer, the buyer is still responsible for the tax. If the seller is an individual, it doesn't matter whether they're an inside California resident or an out-of-California resident. It's always a use tax transaction. It's always the responsibility of the buyer to timely file and pay the tax. The Board of Equalization has no obligation to send you a notice in the mail to tell you when all of this is due. They generally do, but they don't have to. Important note here is if you get a notice in the mail from the county, it's property tax. If it comes from the Board of Equalization, it's use tax. To summarize, if you take possession inside California from a retailer, he'll collect sales tax. If you take possession inside California from an out-of-state retailer or an individual, it is still taxable. But it's a use tax transaction, and the buyer has to timely report and pay the tax. If you want to legally avoid the use tax, you must take possession outside the state, which is just step one. In subsequent videos, I'll explain to you all the details and ways you can legally avoid the use tax on aircraft and vessels in California. This is a reminder that I want to be your go-to guy when it comes to California tax on aircraft, vessels, or vehicles. That's why at the end of this video I'm going to give you my phone number and my email address. This is a personal invitation from me to you. You can communicate directly with me. I look forward to hearing from you. The call is free.
This latest edition of Tax Matters is brought to you by Aero & Marine Tax Professionals. If you'd like a free consultation call with Tom Alston, call the number listed on your screen, or you can use the email address to request a free white paper. As always, thank you for watching.